In this video, we're going to be taking a look at 6 different chart analyses to get you prepared for the week ahead. If you love the content as usual, like, subscribe, and leave your thoughts in the comment section down below. If there's any chart analysis you need us to analyze next week, drop them in the comment section and we are going to try as much as possible to review them. And lastly, if you're interested in learning to trade Forex like a professional, check out our course on Udemy. I have the link attached in the description below. So we just ended our community challenge. It was awesome. It was trillion. Lots of stuff to learn. If you're not on our Discord, please join our Discord because we do have lots of trading activities going on within a week. I have also attached the link in the description below. Without further ado, let's get started. So as usual, we're starting with the gold chart on the daily time frame. So as you can see on my screen, we seem to have had a triple top, right? So 1, 2, and 3. So this means there's a good chance we might see some pullback from gold before making another run at the all-time highs or eventually breaking the resistance level. So this is a very solid resistance levels on gold right now, with gold trying to break through this level, aiming for higher highs or aiming for an all-time high. So right now I'm expecting some sort of bearish pressure coming from gold before we make an attempt at this resistance level again. So this is the daily time frame. We're going to go down to the lower time frame to see if we can spot out good trade opportunities for the coming week. So before we go down to the lower time frame, there's this trend line I've drawn, right? So I'm going to go down to the 4 hours time frame so we can spot out our trade opportunities. Trade opportunities are being spotted on the lower time frames if you're a day trader, right? So trading is all about probability, right? So what's the probability a trade is going to go up or a trade is going to go down? So this is what we will be taking a look at today, as we always do with our chart analysis, because this gives us insight on the direction we're going to place our bets on, right? So just follow along as I carry out price action analysis across these pairs and gold. So on the 4 hours time frame, I'm expecting gold to probably come retest this trend line, right? Bearish movement onto this trend line before we make another bullish move to the upside. So this is this is the most likely scenario in my opinion. So I don't think we're going to come all the way down to these levels. So I'm just giving you one example. I don't think we're going to come all the way down to these lows, right? It's totally possible, but before we talk about coming down to these lows, we have this trend line to contend with. So my next possible target for gold is touching this trend line. So it could be around this place, it could be around this price level or this price level. So it depends on how fast price moves. So how do we get down to this level, right? So I'm going to break down this chart for you to understand my perspective on how I think about the market. So I'm going to go down to the 2 hours time frame. So now we know our target is going to be this trend line, right? Assuming we do get a reversal. So that leads us to the question, when do we go short? So I'm going to go short when we take out this trend line. I'm going to explain why. Okay, just give me a minute. I'm going to explain why I think, this trend line is a very valuable trend line to watch out for. So if you paid attention in markets last week or last 2 weeks, last week, you would notice that this price levels here was a very difficult price level for gold to break out. So I'm going to go down to the 1 hour time frame, so this is clearly visible. So I remember waiting for price to break this trend line so I could go short, aiming for lower price target, but gold never broke through this trend line. We kept bouncing up. So we had 1, 2, 3, 4, 5, 6, 7, 8. So we had 8 bounces off of this trend line. So this means this trend line is a very significant price level to pay attention to, right? So eventually when we come back to this trend line, so for example we come back into this trend line, we get a consolidation, maybe a few price rejection, we break out. This would be my scenario to go short. I'm going to go heavy on that short position, aiming for this trend line we spot out on the daily time frame, right? So this is going to be one of my scenarios to go short, right? So for a long-term trade target, aiming for this trend line. So this I'm going to trade gold. I don't think it's logical to go long on gold right now because we are still currently trading around the all-time highs. Except you're a scalper, so you just want to grab a few pips, then you can trade the swings or the price movement along the way as the trade evolves, right? So something else to pay attention to is that we had a very good bounce off of this resistance level, right? Excuse me. So just as we had multiple bounces off of this trend line, we also had multiple rejections. So 1, 2, 3, 4. So we had 4 good rejections before we eventually broke out, sending price to the all-time highs. I think I talked about this in our, a previous weekly analysis. Yeah, I talked about price breaking through this resistance level. I don't know if you watched that video from last week, then you will notice we talked about price breaking through this resistance level, having a retest, and then moving upwards. I hope so many of you took advantage of that price action, right? So right now we have price retesting this trend line, which means there's a good chance we get some sort of bounce, which we already saw on Friday, right? So a good bounce. Some people took this trade, right? So if you like to take risk, then you can jump into trades like this. It gives you good risk to reward ratio because a retest here will give you maybe 10 pip stop loss or 20 pip stop loss, right? And you just ride the trade as the market evolves or as price action evolves. So right now we'll expect some sort of consolidation. So this is what I expect from the market, right? Some sort of consolidation and then a breakout. So if this happens, this will be another scenario to go short. So for a short-term target, right? So if this happens, like a bearish continuation pattern following this massive dump from the NFP on Friday, then I'm going to go short, aiming for this lower trend line, right? So this is going to be the best case scenario for me. I'm not going to be going long on gold right now, okay? The only way I'm going to go long on gold, I'm going to get rid of this trend line because very soon I think this will be null and void, right? So the only way for me to go long is waiting for price to touch this trend line. So the first attempt we make at this trend line would be an opportunity to go long for a quick trade, right? If you are interested in getting a quick 100 pips, 150 pips on 200 pips from gold. So the moment we tap into this trend line again, I'm going to go long following a reversal candle, like a bullish engulfing candle or something like that. So I'm going to show you an example real quick. So if you take a closer look over here, so over here, when we bounced off this trend line, you can see we had a bullish engulfing candle. So if you had gone long here, you would have made around 200 pips. Decent for a day trader, right? Because this closely aligns with a resistance level here. And your stop loss is just going to be around 80 pips or so, right? Because the stop loss is going to be below the engulfing candle. So this is going to be my scenario to go short on gold, waiting for a consolidation around this price level to go short, aiming for this trend line. And then I'm going to look for a quick opportunity to go long for just a quick profit, maybe 100 pips, 200 pips. And if we eventually break through this trend line, I'm going to aim for a bearish price action, aiming for this trend line. So the one spotted on the higher time frame. So that's it briefly for gold. Moving on, we're going to talk about EUR-USD. So EUR-USD, nothing much to see. I'm going to be brief about this. We are still in a bullish trend, right? Price creating series of higher highs and higher lows, but we are kind of stuck at this range. So area seems to be ranging right now with price being rejected at this resistance level, where we have price being rejected at the support level. So I'm just going to wait for us to come into this support level. So if we come into the support level, this will be my scenario to go long, because this is a bullish trend. So I'm going to go long around this price level. If I get a bullish engulfing candle or I get a bullish divergence, that will be my scenario to go long on gold, aiming for the resistance level, right? But if we don't get that confirmation of a bullish reversal, then I'm going to wait for a breakout. So that breakout is going to go with a retest and a reversal for me to go short, aiming for lower price targets like this lows here and this lows here. So this will be my outlook for EUR-USD. Alternatively, if we get a bullish breakout from this resistance level first, then this will be my scenario to go long. Meanwhile, I'm going to wait for a consolidation at the resistance level. So I'm not just going to go long if we get a massive, price movement above the resistance level, because it could easily become a fake out, reversing to the downside. So I'm going to wait for price to slowly, I'm going to get rid of this. So I'm going to wait for price to slowly, creep into the resistance level, consolidate a little, and then give us that bullish breakout for me to go long. So this is my scenario on EUR-USD. So I'm either going to go long around this support level, or I'm going to go long at a break of this resistance level. So if we don't get a confirmation of a bounce at this support level, then I'm going to wait for a breakout, a retest, and a confirmation of a reversal before going short, aiming for this lows here. So that will be trading against the trend, which is very risky, right? But it's what we do. Okay, we take advantage of the market based on what we see. So but I'm going to be focusing more on going long rather than going short. So that's the brief for EUR-USD. Moving on, we're going to talk about EUR-GBP. This is a very interesting chart. We have price making higher lows. So this is a daily time frame on EUR-GBP. We have price making higher lows. We have 1, 2, 3, 4. But at this price level here, you can see price has been ranging since the beginning of this year, right? So all the way from December 2022 or January 2023. So let's say December 2022, right? So for about 6 months now, price has been ranging within this price level, giving us 1, 2, 3, and we are currently retesting the support level the 4th time. So my base case scenario is that we either go down or we go up. So I'm going to show you, my bearish bias and my bullish bias, right? So we're going to take a look at the bullish case scenario first, which means we're expecting price to see a bounce to the upside, right? Because this is a kind of like a bullish trend, price making higher lows, but not clearly defined higher highs. But nevertheless, we're still making higher lows, right? So it's logical to expect a bounce if you are being bullish on this chart. So I'm going to show you why I believe we might see a reversal. Then I'm also going to show you why I think we might get a breakout. Then you can do it, the information, however you see fit, right? So going on to a lower time frame. So I'm going to start from the 4 hours time frame. There seems to be a bullish divergence on the 4 hours time frame, but that bullish divergence is not yet confirmed. Okay, so you can see this is the support level we had on a daily time frame. So just give me a minute. So this is excuse me. Okay, so this is the support level we had on the daily time frame, and you can see we had price making lower low. So 1, 2, so something like this. So we had a lower low on price, and we had a higher low on RSI, though the RSI is not confirmed yet, because for the RSI to be confirmed, we need the RSI to move back into the safe zone. So we are currently oversold on the next leg of the RSI, but nevertheless the next leg is significantly or a little bit higher than the first leg. So a higher low on RSI and a lower low on price, and price seems to have formed a doji at the support level just at the close of the 4 hours candle on Friday. So when market opens, if we get a bullish candle, right? So if we get a bullish candle, if we get a bullish candle on Friday closing above this red candle, then that would be a confirmation to go long, because that will also be a confirmation of the bullish divergence, right? So this is the first case scenario to go long. Okay, because if you take a closer look on the daily time frame again, so moving back to the daily time frame, this candle didn't close below the lows of these other candles, right? So there's a good chance we reverse. So I'm going to show you the bearish case scenario right now, then you decide what you do with the market. So for me, if we open on Monday, excuse me, and we get a bullish candle closing above the last significant red candle on the 4 hours time frame, then I'm going to go long, aiming for these highs here, right? So first target, second target. That's if we do confirm the bullish divergence. But if we do not confirm the bullish divergence, then I'm going to look forward to going short, and I'm going to show you why. So taking these candlesticks, so the lows, so we have multiple price rejection on this trend line. So we have 1, 2, we have 3, 4, 5, 6, several ones here. We have 7, we have 8. Then before we had a breakout. So what this means is that we have broken through this trend line. Now price is sitting at a very good, a very good support level, which means we might get a bullish reversal, okay, just to confirm the trend line as a bearish continuation pattern. Then we go short, right? So this is what I would expect if we're going to look at the bullish case scenario. So even if this happens, then this will also follow up with the bullish bias we have of the bullish divergence. So if we have that bullish divergence, then you just have to watch out for the price levels where we get a reversal. Okay, so I'm just going to get rid of this so I can explain better, right? So target is going to be here. So if we do get that bullish reversal from that bullish divergence, so coming all the way up to this price level, then you have to pay attention to what we have on the higher time frame, which is this trend line, because this could be a retest right before we go lower, because price seems to have broken this trend line considering the bearish case scenario for EUR-GBP. So if we do get a retest at this price level and a reversal, then we are going to go short when we take out this support level. Okay, so we're going to go short when we take out the support level. So that means we're going to wait for, let's say, a reversal to confirm the bullish divergence and a bearish reversal to confirm the bearish case scenario for, EUR-GBP. So we are going to probably wait for a retest, another reversal to confirm the breakout before going short. So this is going to be the bearish case scenario for EUR-GBP when we break this support level. Okay, so this is the daily time frame. You can follow up all this on the lower time frame as low as the 2 hours time frame. So all you do is wait for a breakout from this support level. So I'm going to get rid of this. So let's say, for example, on the 2 hours time frame, we do get that bullish divergence, right? So price goes up, retest this level. So that will be approximately, let's see, that will be approximately 40 pips. So if you scalp or you think 40 pips is good enough, then watch out for that bullish divergence. So if we reverse at this area of value, breaking the support level, then that invalidates our bullish divergence. So we make small profit on the bullish divergence, and eventually when we break the support level, we just wait for a retest as a confirmation of the breakout, then we'll go short following the bearish case scenario on the higher time frame. So this is how you trade multiple time frames. So on the lower time frame, you see a bullish divergence, you take advantage of the bullish divergence when it's confirmed. Then you pay attention to what you have on the higher time frame, which is a bearish breakout, right, from that trend line on the 1 hour on 1 day time frame. You wait for a confirmation, you go short. So that's how you can trade, the market on both the lower time frame. Also, we're paying attention to what's happening on the higher time frame. So that's it briefly for EUR-GBP. Moving on, we're going to talk about the GBP-CHF. So this is a very clean and simple chart, right? So for those people that likes, this stuff that you call, sniper entry, giving you a tighter stop loss with a good, risk to reward ratio, then this chart is for you. Okay, so clearly this is a bearish trend. I won't call this a bearish trend per se, so I would call this, a chart where we have bearish pressure. Okay, and I'm going to explain why. So looking at this chart on the 4 hours time frame, you can see GBP-CHF making lower highs. One, lower high, lower high, lower high, slightly higher high, but this one is lower than this one, so clearly a lower high. So right now we had price reversal to the downside, and we seem to be forming some sort of a bearish continuation pattern after this move. So there's a good chance, right? So there's a good chance we come to the downside like this, coming down, maybe another reversal or breaking out from this flag. So why should we, or what would make us go short? So I'm going to show you a few confluence to validate a short entry at this price level. So first of all, we are currently at the highs of the channel, which means we are due for a reversal if price is to respect the price action on this channel. So remember, this is a 4 hours time frame. So that's one confluence, right? Currently at the highs of the channel. Also aligning with these highs here. So this is an area of value, an area of liquidity, whatever you choose to call it. Okay, and we have some sort of bearish engulfing candle on the 4 hour time frame. So this bearish engulfing candle, so this bearish candle is, it totally engulfs this green candle. So it's bigger, the body of the red candle is bigger than the body of the green candle, which is a bearish engulfing candle. Not a very good one, but that's what it is. Secondly, we have some sort of bearish divergence. So price making higher highs, and we have the RSI making lower highs, and this one is somehow confirmed because we have the RSI reversing into the safe zone, right? So we have higher highs on the RSI, lower highs, higher highs on price, lower highs on the RSI. So that's a bearish divergence, which means there's a good chance we might see some bearish reversal. Then we have a bearish engulfing candle, which means there's a good chance we see some bearish reversal. We are currently at the top of the channel, which also aligns with this area of liquidity or area of value, however you want to call it, which means there's a good chance we see a bearish reversal. And lastly, if you pull up the 5 tools, taking this highs to this low, you would notice that this area of liquidity or area of value or top of the channel or rejection forming the bearish engulfing candle aligns with the 61.8% fab level, which means there is a good chance we are going lower. So the only thing to do, or the best thing to do, looking at probabilities, is to go short when the market opens for a tighter risk to reward ratio. So I'm going to show you something. So if you go short when the market opens, your take profit is going to be around these lows, and your stop loss is just going to be above the highs of the bearish engulfing candle, right? So this would be a 30 pip stop loss trade with a 120 pip take profits target. So the risk to reward ratio validates you entering this trade, coupled with all the confluence we've had, verifying that there's a good chance we go short at this price level. So that's how I trade, based on probabilities. Even with all this confluence, we might still be wrong. It's how the market works, right? So some people will tell you we have price making a high, another high, a low, a higher low. So this means it's a bullish, bullish market structure. Yeah, right here, what we have within this channel is bullish, but there's a good chance we reverse to the downside, making another higher low, right? Even if we touch the trend line here, there's a good chance we make another higher low before making a higher high. So this would still go in line with what we have within the channel, okay? Following the bullish market structure we have within the channel. But that doesn't mean we can't take advantage of quick trade opportunities within the channel where we oscillate, right? So there's a good chance we come lower, and we've seen multiple confluences as to why we could eventually go short, since this is a very good risk to reward ratio with a very tight stop loss. So that's it for GBP-CHF. I'm going to take this trade. I don't mind if we hit stop loss or if we break above, but all the technicals points to the fact that this is a valid trade, and I'm going to take it. So moving on, we're going to talk about CHF-JPY. Bullish market structure, and this line here is our resistance level from 1975, I think, or 1978, right? So there's a good chance we come touch this trend line like this. So there's a good chance we come into this trend line before we eventually see a drop, or there's a good chance we might just reverse to the downside. So I'm going to show you my opinion on CHF-JPY and what I'll be trading, right? So going out to the lower time frame, this is a daily time frame. We had a bullish move, resistance level, breakout, consolidation, bullish move. So going down to the 1 hour time frame, this is where things get interesting. So I'm going to show you what I'll be watching out for CHF-JPY. So CHF-JPY, after making this massive movement to the upside, we can see some sort of bearish reversal. Okay, so I'm going to wait for price to come into this area of value where I'm going to look for opportunity to go long, aiming for higher price targets, because we are clearly in a bullish trend. So when we come into this level, I'm going to look for an opportunity to go long if we get a bullish divergence, a bullish engulfing candle, and so on, right, like we had here. So this is clearly a bullish divergence, and it worked perfectly. So there's a good chance if we get on that bullish divergence here, it works, because that's how price action works. Okay, so you can see I have an alert already set on CHF-JPY. So if we come to these lows, I'm going to look for opportunities to go long. So you can see the bullish divergence, lower lows on price and higher lows on RSI, and you can see the massive movement to the upside. So if we get the same thing here at these lows here, I'm going to go long in the direction of the trend, because that's going to give me a tight stop loss, because my stop loss is going to be below this support level, right? So alternatively, if you are looking to scalp, or if you're looking to take a trade with a very tight risk to reward ratio, here's another one for you. We're currently trading around an area of value. This is our high, where we had this consolidation, where we had this reversal, and this could be a lower high, lower than this one. So there's a good chance you could go short like this. So give me a second. So you could go short like this, right? So price target is around 200 pips, and stop loss is around 40 pips. So this is a 1 to 5 risk to reward ratio. So if you go short here around this area of value, your target would be around the lows of this support level, where we look for opportunity to go long, while your stop loss is just going to be above these highs here, which is going to be around 40 pips, right? And since this is a JPY, the JPY is the base currency, right? No, sorry, it's the quote currency in this pair. Then you are not going to lose $40 if you trade with 0.1 lot, because the funds is going to be calculated in JPY. So you get what I mean. So this is going to be another trade opportunity for those who are willing to take the risk to go short. So I wouldn't be going short like this because I don't really trade this kind of setups, but some people do. So that's why I'm pointing it out to you. If you do, then this could be a very good opportunity for you because the risk to reward ratio is massive. 40 pip stop loss to 120 pip take profit. Good risk to reward ratio. But in my opinion, I'm simply going to wait for price to come into this area of value. Then I'm going to look for opportunities to go long because this is a significant area of value. And if we do break through, we don't get the confirmation to go long, then I'm going to wait for a good breakout, a retest, a proper confirmation before going short. So lastly, we're going to talk about CAD-JPY. So CAD-JPY, nice clean chart. So zooming out, we had a massive bullish move to the upside, and it seems price is reversing to the downside. So right now, I wouldn't be going long because this looks like a bearish continuation pattern, right? And since we've had a fake out before, so around this price level, just give me a minute to zoom in. So we had a fake out around this price level before, which means there's a good chance we might see another fake out. So I wouldn't be going long when we take out this resistance level. I'm only going to look forward to go short when we break this trend line. So this trend line we see here is what I'll be watching out for to go short. So we might see something like this, maybe a small move to the upside, followed by a reversal to the downside, a consolidation, and then a breakout. So when we break through this trend line, then I'm going to go short on CAD-JPY, following what we have here. So what we have here is a massive bearish move, a consolidation in form of a bearish rectangle. So depends on when we get our bearish breakout, that will determine how we jump into this trade. But in my opinion, I'm just going to go short when we break this trend line. So if we get something like this, consolidation and a clean bearish breakout, then I'm going to go short, aiming for these lows here, where I'm going to look for opportunities for either a long position or wait for a breakout for a short position. So this is how I'm going to trade CAD-JPY. I wouldn't be going long because we've had a fake out before, and there's no clear price action to signify a bullish case scenario for me to go long. Instead, we have a clear trend line with 3 good price reversals. So 1, 2, 3, which means this is a very good level to go short if we indeed get a breakout. So that's it from me this week, guys. If you love the content, please like, subscribe, leave your thoughts in the comment section, and remember to check out our course on Udemy. You are going to learn a lot with regards to price action in the advanced class. Do check out our course with a link in the description below. Once again, like, subscribe, and leave your thoughts in the comment section. That's it from me, guys. See you next week.